host, Marla Perrong, and this is my second episode of my podcast. And today's guest is Edgar Ortiz of the Edgar Ortiz Agency.
Hey, thank you for having me.
Yeah, thanks for coming. So happy. Let's just jump right into homeowners insurance.
Oh my gosh.
Yeah,
What
I
a
know.
topic.
Let's start off
topic.
strong.
Yep.
Yeah, it seems like California in particular, I'm going to speak to California because that's where we're at, is kind of an insurance crisis. Would you agree with that?
Totally agree.
Yeah.
Yeah, that's a good way to describe what we're going through right now. It's chaos right now.
Yeah, I bet. Yeah. And it's probably started years ago.
Oh yeah, this all kind of is coming to a head right now, and we're just seeing the ramifications of what's been brewing for several years.
Uh-huh.
And the consumers inevitably are feeling the
We're
pressure
totally
right now.
feeling it. Absolutely. Yeah.
yeah.
And then with the wildfires, it's just like over the top right now.
Just like literally throwing gasoline on the fire. It's what it's turned into. It's nuts.
Right. Exactly. Yeah. So what would you say like started this whole thing? How would you describe, how did we get to this point basically?
So insurance has been heavily regulated for many years, right? And it's a good thing that's so regulated because it's one of those industries where you buy a policy and then you're scared to use the policy. And so thus, there was a lot of room in the past for companies to commit fraud and companies to take advantage of the consumer.
Okay. Mm-hmm.
But with those regulations that were put in place to protect the consumer, now they've kind of backfired and prevented companies from being able to generate even a modest profit or any profit at all. And what that in turn has created is a situation where companies have actually pulled out of California.
Yes.
And thus leaving just a few. And, with supply and demand in the absence of the supply, the price is going to go through the roof.
Yeah, for sure. And it was State Farm that had the most, the most policy owners or?
Yeah, they hold one of the biggest market shares in California. Absolutely. They're one of the giants.
Yep.
Yeah.
Yep. Okay. So, and then the fires started over the last, that happened in January. And I heard that a lot of people were uninsured or just underinsured or whatever was the case there.
Yeah. So there's a combination of both. The insurance companies were taking action 3 years ago to prevent what they saw was inevitably huge losses coming down the pipeline. And they know when they have all this exposures, thousands of houses that they're insuring, but not bringing in enough premium to cover the losses.
Right.
They had to take aggressive action. And what they did is they cut policies, they canceled or non-renewed policies. They took underwriting action to where they wouldn't accept certain types of homes or homes that are older than certain years.
Yep.
And that forced the clients to kind of go scrambling for different insurance policies.
Right.
And they turned to resources like the California Fair Plan. When everybody did this huge exodus toward the Fair Plan, the Fair Plan was not equipped to handle the huge volume of clients that they had coming in, and it wasn't designed for that.
Yeah, for sure. And could you tell us kind of like what the Fair Plan entails for anyone that that's not familiar with the Fair Plan?
Absolutely, yeah. Fair Plan in a nutshell is a syndicate. So it's a collective of admitted insurance carriers in California, pooling resources and sharing through the risk of this established plan.
Okay.
So the Fair Plan was created actually through the Watts riots is where it came from.
Oh, back then.
Back in the day, yep.
Yeah.
And so when companies or businesses were not able to get insurance, they created this plan to where you can go and get insurance. Business owners are oftentimes familiar with State Fund. And what State Fund is a workers' comp program that's very similar to the California Fair Plan. When you can't get insurance elsewhere, you go to State Fund, and that's for workers' comp. When you can't get fire insurance elsewhere, you go to the Fair Plan.
Fair Plan, yep.
And so it's not necessarily a government agency, but it was mandated by the government to create this program.
Gotcha. And I'm hearing that it's underfunded. They're not going to be able to handle all the losses right now. So does that mean that we're all going to be feeling it?
We're definitely going to be feeling these last losses for sure. Yeah, this is gonna ripple through California's economy for several years. It's scary. How things are going to play out, and everybody's unsure exactly how it's going to pan out, but we know for one thing there's not enough money in the Fair Plan to cover all the losses, so they have to purchase reinsurance, or they have already purchased reinsurance to cover that major catastrophes. But that carries a deductible with it as well. That carries other ramifications. We have to, the companies inevitably pass that cost down to the consumer.
Yeah. So give us some good news.
So the good news is Fair Plan is still writing policies. They're still an option. Other carriers are still taking action to come back into California. So it's not all doom and gloom.
Okay, so some carriers are looking to come back.
Oh yeah.
Okay.
The company that I work for, we're still writing business in California. We're still taking action to open up different markets.
Sure.
Landlord policies are coming back. Renters policies are coming back.
Okay.
And so we're going to be able to have access to these different products. Inevitably, or eventually, when other companies come back, then we'll see a little more competition for business, and the prices will start to stabilize.
That's where we're going to start to see the prices go down. Okay.
Yep.
So really, we just need more of these companies to start coming back to California.
That's what we need. Yeah, we need companies competing for business.
Yeah, definitely.
And then the prices will adjust.
Yeah. Sounds good. Well, I was thinking that this is a good time for all the homeowners right now to just take a look at their coverage. And how would they know if they're correctly insured or underinsured, or what would you suggest on that?
Yeah, that's a good question. So a lot of times you can just look at your policy and do a simple calculation. You take your dwelling limit, which is how much the home, the primary structure is insured for. Okay. And you divide that by your square footage. Okay. That gives you the cost per square foot. In California, we're seeing roughly about $275 to $315 is a good range to be in. Now, if you have a custom home with, travertine floors and marble countertops, obviously you want more per square foot. But if you just have your average house, even a tract house, $275 to $315 should be adequate.
Okay, sounds great. Everyone should be looking at that. Okay. What recommendations would you have right now for buyers? That are in the marketplace? Buyers,
I always recommend, working with your real estate agents and talking to your lenders, seeing who they have partnerships with, and then reaching out and getting some quotes early. Don't wait until, 3 days, a week before you want to close escrow, and then all of a sudden find out your insurance is going to be 3-4 times what you thought it was. It's waiting for the last minute is what's going to hurt you.
Definitely. So even if someone is about to make an offer, let's say they're looking at homes with their agent, they're thinking of making an offer, but they're not sure how much that piece of it's going to be. Is that something that you can help us with?
Yeah. Even better. Okay,
cool.
So if you're actually considering making an offer on a house, start shopping the price even before you have that offer submitted. It's helpful because insurance may be $12,000 for that house.
Oh my gosh.
And then all of a sudden that's going to throw off all your numbers.
Oh, definitely.
And whether you qualify or not with that insurance policy, do you really want to pay that much?
Right.
And that's all going to come into account when you're crunching your numbers, even before you make that offer.
Yeah, definitely. I mean, I know of people that I've talked to that have said they just canceled their insurance on their own. They couldn't pay it.
Oh yeah.
That's just a dangerous place to be in.
Absolutely. There's a lot of people that are just saying, if it burns down, it burns. Yeah.
Yeah, exactly. Like Acton. I talked to some woman that's in Acton and she's like, no, I just can't afford it right now. I'm like, that's bad.
Scary.
Yeah, it's really scary.
And so that they have all their, their assets invested, or this is their retirement plan.
Yeah, definitely.
And then now it's in jeopardy because they can't find a reasonable policy. It's super sad. I've seen that situation happen a lot. Clients with fixed incomes. Yeah. We got the elderly that are, living off Social Security checks.
Yep.
And then when that insurance premium goes up by $300-$400 a month, where does that money come from?
That's coming out of their grocery bill or whatever.
Right. So now they're eating, having to adjust what they're actually buying on a daily basis. And it's sad, truly sad to see the struggle that people are going through in California.
Yeah, for sure. As far as the escrows, would you say, I know you're not escrow, obviously you're insurance agent. Yeah. But have you seen a lot of escrows fall through, or do you have people coming to you that are saying that?
Yeah, it's funny. This week alone, I think I've gotten probably 2 or 3 phone calls from somebody saying, "Oh my gosh, I can't close on my house. I can't get insurance. They told me you're the guy to talk to," and I just go, relax. We'll figure it out.
Yeah.
Get on my computer and tell my team. We start keying it in.
Yep.
And we can usually find something pretty quick.
Nice.
But the biggest difference is that there's certain agents out there that are a little more aggressive in looking. And there's other ones that just their hands are tied as well. So you got that kind of dynamic that's out there right now, preventing good agents from finding policies for clients. But yeah, escrow's been delayed numerous times.
Yeah.
But I think it always boils down to, did they do their shopping early?
Yeah, definitely.
And
yeah.
if they did, they don't have anything.
They
to worry
should be
about.
fine.
Yeah.
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 The fair plan can get approved within usually 24 to 72 hours. Sometimes even quicker. And most carriers, there's always some carrier out there that wants the business. It's just, is it in the right price range? That's really the big question.
That's what it always gets down to for the client when they're putting together all their numbers. Yeah.
Yeah. Now, you do have those freak scenarios where there is a wildfire.
Yeah.
And now the whole area has been shut down. They're not going to write policies.
Okay. So Palisades and
Yeah.
Altadena and all that right now.
Yeah, the moratoriums go in place, and then they just shut it down while the fire is active. As soon as it's within like 98% containment, they'll say, okay, we're opening those zip codes again.
Oh, okay.
But leading up or until that, they're shut down. They're not able to write. But that's where resources like the Fair Plan will still actually write. They don't have a moratorium that they put out.
Oh, okay.
So we've had clients that were actually near the evacuation zones that were just at the tail end of their policy, and it was going to expire during the fire. And so we were able to actually go get pictures, show that the structure's there, get the policy written. And so that way, just in case it happened to burn after the fact, they would still have that policy in place. Oh,
yeah, I was thinking that wouldn't be the case. If it's so close to it, you're probably out of luck, but it's good to hear.
Luckily, we have that program available to us. I went in there with my hard hat and my little yellow construction vest, and I was just like, I'm here on official business, so they let me in.
Nice. You had to take pictures and stuff of that?
Yeah, so we have to show the structure is still standing at the time of writing the policy.
Okay, gotcha.
So it's to avoid fraud, obviously.
Yeah.
Your house burns down, you go, oh, I need an insurance policy. And then insurance companies don't want to pay it. Nobody wants to pay that.
Of course, yeah.
Right.
Yeah. Okay. All right, very good. As far as what do you know that what's going on as far as the Palisades, all those people that are underinsured, what's happening with them right now?
I'm getting. I can only speculate right now with what we're seeing because we didn't have a large amount of policies out there in the Palisades. We did have a large amount of policies in Altadena. But what we're seeing is the clients that are underinsured, they're just getting paid out their policy limits. So let's say your dwelling limit is $500,000. Realistically, it's going to cost you $1 million to rebuild your home.
Right.
The insurance company is going to cut you a check for $500K and say, here's your money. Now, unfortunately, that's all they purchased at the time that the contract was written.
Yeah.
So that's all the insurance company is on the hook for.
Do you think that sorry?
Yeah, no, there is resources out there that I think eventually will come out, grants or different loans that'll come out and help people offset that cost. But
in the meantime, you think someone in that situation might just kind of take the insurance money and leave?
Yeah.
Because they're not going to be able to afford with the rising costs of construction, right?
Right. Yeah. Take the money and go to Tennessee, build a nice house out there.
Exactly. Tennessee. Everyone's going there.
Sell their plot of land out here. And then,
Yeah.
I wouldn't blame them if they had to do that.
Definitely.
That seems like a sound play. If they don't have enough money to rebuild, what other option do you have?
Right.
You're not going to build a 1-bedroom, 1-bath house amongst your neighbors that have like these 4,000 square foot homes.
Right. And you have 5 people in your family. How are you going to do that?
It's
not realistic. Yeah.
No.
Yeah.
Everybody sleeps on the couch.
Yeah, exactly. Yeah.
It's bad.
So, Well, what would you recommend for sellers right now? Is there anything particular for sellers?
Oh, same advice would apply for sellers as buyers. Is shop early. If you're going to sell your house, it wouldn't hurt to get a quote on what it would cost to reinsure that house.
Just to give that to the buyers and their agents right now.
Yeah. It helps save everybody time.
Yeah.
And that way you can kind of see if that's going to be a problem when it comes to sell your home.
Yeah.
And sure. I'm not a real estate agent, so you might be able to answer this question if sellers can offer credits towards costs like insurance or something else. Have you seen that happen in the past?
I have not seen that, but everything's negotiable.
Yeah.
Why not? You know?
So
why not?
Maybe if a little bit of credits towards helping to buy a house, especially if they know that it's in a high fire zone and that insurance is going to be expensive. At least that'll help them get through the first year.
Yeah, definitely.
And then second year, it's back on the buyer.
It's back on them. Yeah.
But at least that way you're able to get over that huge hurdle. A lot of clients will make offers on homes and don't even know what the cost is. Lenders right now, I'm still seeing lenders are starting to catch up. Well, there's a lot of good lenders out there that already built
Yeah.
a good insurance price into their policy or into their package, right?
Mm-hmm.
But some of them were still underestimating how much the insurance was going to be. And I'm telling all lenders right now, at least $2,400 is what you should be estimating. If it's a 2-story, 3,000 square foot home, put earmark at least $3,500 in insurance. And as soon as you start getting close to anything that looks like brush or hills or the foothills, even, double that.
Really, double it.
Yeah,
Oh, wow.
estimate at least $6,000 for insurance. That's realistically what the price is. So California is one of the lowest states when it comes to premium for homeowners insurance. But did you know that we're one of the most expensive states to rebuild in? We're actually second or third highest state when it comes to cost of reconstruction.
Yeah, I definitely believe that.
Hawaii is one of the highest states. And obviously we have to ship materials over to Hawaii and start building. So that's why the cost of reconstruction in Hawaii is so high.
Yeah.
But California being way up there, and yet we're so low on the totem pole for the cost of insurance is kind of out of whack.
It is, yeah.
It doesn't make sense.
That doesn't make sense.
Why our premiums should be that cheap.
Right.
And that's because I feel like insurance prices have been kept artificially low for so long.
Uh-huh.
Are you familiar with how subsidies work for like commodities like corn or
no, fill me in.
So subsidies, the government actually pays, they have a set price on what they'll pay for the cost of corn, like a bushel. I don't know how they classify it, right?
Yeah.
But like a bushel of corn, they'll pay X amount of dollars at market. Well, when market is not going to give you X amount of dollars, the government steps in and cuts a check for X amount of dollars. So they're offsetting the expense to the farmer. So that way they can sustain and continue to grow corn for us, right? The insurance has been kept artificially low, almost not through a government subsidy, but because of government regulations, the price is kept down.
Was that during COVID or is this before that?
Way before that. It started in the 80s.
Oh, gotcha.
And so prices have gone up. During COVID, prices skyrocketed. And as a result, the premiums never caught up.
Uh-huh.
And so that's really what's kind of, opened this door to this big problem.
Right. Wow.
I think what we're seeing right now, the prices are starting to, they've gone past what they should be, and eventually they'll dial back into where they need to be. Mm-hmm. So
how long do you think it's going to take to get to that point?
I think we're in the ballpark of like 2 years.
Okay.
Maybe once insurance companies come back, once they start competing for business.
Yeah.
Things will balance out again.
Do we still need do we need reform, or what do we need to get the companies to come back?
Oh yeah.
Or who's working on that?
Yeah, the Department of Insurance is working nonstop to try and get this done. So they're super proactive on what needs to happen. They're bringing in different models that'll help insurance companies rate for premium a little better. Mm-hmm. And thus allowing them to charge for things like wildfires and catastrophes that they haven't been able to build into their insurance prices before. Mm-hmm. So that's going to allow a little more. It's going to come in an added cost to the consumer, but it's going to allow insurance companies to position themselves better, and thus making it more attractive for other insurance companies to come back and do business.
Right. Very good.
Yeah. So there's good things coming down. It just takes a while. It's legislature, so.
Of course. It takes time.
It takes time.
Yeah.
We got to pass laws. We got to create the laws for it.
Yeah.
Rewrite the paper and get, of course, the people to approve it.
Yeah, definitely.
So once that's done, we'll see companies come back and we'll get, some better pricing.
Yes. Some relief. Yeah.
Yes. We could use that.
I had some question come through about how is the pricing? How does the pricing work? Like how could you kind of guess on a price or on a particular home?
It used to be easy. It used to, like for the cost of insurance, right? How much the premium's going to be?
Exactly. Yeah.
It used to be like. Is there a ghost in here?
Yeah, it's Annabelle.
Okay.
It's Annabelle.
Nice. So, calculating insurance price used to be a lot easier, right? We used to be able to be like, oh, home's going to be between $1,800 and $800 for the year to do insurance. Mm-hmm. Now it's really kind of a crapshoot, for lack of a better word.
No.
It's like, is it in a high fire zone or is it within 1,000 feet of brush? Well, if you're out here in the Antelope Valley,
that's everybody, right?
Oh yeah, there's so much vacant land out here that you're within 1,000 feet of brush anywhere you go.
Yeah.
And that's part of the beauty of living out here.
Totally. Yeah.
The
Yeah. We
open
have more
space.
space. Yeah, exactly. We got the beautiful skies out here and yeah.
Oh yeah. The clean air. I mean, it just, it feels good, but that's playing against us right now because insurance companies are saying, oh no, there's vacant land right there. That's going to catch fire.
Yep.
But they don't see on a micro level, it's just a few tumbleweeds, right? Even if it catches fire, it's just going to burn through real quick and we'll be okay.
Yeah.
But that's what's making pricing so hard to kind of gauge right now is that the absence of companies that are willing to write.
Huh.
So
is there like, what do you guys do? Like you type something in and go like, this is the square footage, this is the location, and then it just pops out the range basically?
Yeah. So we start off by doing what's called a reconstruction estimate. And to try and keep it a little simple, it's punching in the square footage, the features of the home, stucco, what type of roofing it has, what type of finishes the home has. And a lot of that we're doing our best educated guess on, or we're looking at pictures from Zillow and things like that. Or we're asking the consumer directly, hey, what kind of countertops do you have? Do you have oak cabinets?
Really?
Oh, yeah. We punch that all into the system and it spits out a number that says, this is what the home should be insured for.
Okay.
And so with that number, we punch that in and it calculates what the premium looks like.
Okay.
Now, go ahead.
No, you just gave me a thought of like roofs and stuff like that. Is this true that sometimes the insurance companies are like sending drones to look at the roofs or like having, pictures taken of them or asking the homeowner to send in pictures of your roof or get it replaced? Is that stuff actually?
We're not supposed to.
Okay.
No, I'm just kidding. Yeah, that's
it's
happening.
really happening.
Yeah,
okay.
They have inspectors out constantly trying to assess whether a home should continue to be insured or not. It starts with satellite imagery, so they look at the aerial view and they see if there's a bunch of debris on the property. Chances are they're going to flag it for inspection.
So all these homes out in the desert where they just put a bunch of crap in the yard.
Yeah.
You guys are at risk of having a higher premium.
Oh yeah, or at risk of being non-renewed. So what it is a liability risk.
Yeah.
That's where it starts.
Yeah.
So then they see it could be a lack of maintenance issue. Are they taking care of their roof? Is something else amiss? And that really throws a big red flag. They actually have AI data that's going through satellite imagery saying these potential homes have a lot of debris on them.
Oh, geez.
They should be flagged and they should be looked at. And then companies are actually actively going in there and looking at the property itself.
Well, we want those properties cleaned up anyway because they're an eyesore. Nobody wants to have that as a neighbor anyway.
No.
So, we don't know what's going on over there. Like,
or do you want a pile of tires
yards
burning down?
Yeah, exactly.
Next to your house? No way.
No. Yeah.
So that's it's good. I mean, it's bad for those that can't afford to maintain their property because some people just can't.
I know.
Right?
Yeah.
Some people on a fixed income can't replace their roofs necessarily, so they wait for a wind to come through and knock the roof off, and then they're using their insurance policy to pay for it. And tragically, that's really what's happening.
Oh gosh, that's crazy.
Same thing with plumbing issues. That's one of the huge water losses or huge losses for insurance companies is plumbing issues. Pipes bursting in the home. They cover the claim. They send a plumber in. Plumber repairs just a little 3-foot section or whatever section was actually damaged from the pipe, and then they're not the client's not looking at the entire plumbing system to see if it's time to replace it.
Yeah.
And so that's leading to other major losses for the insurance companies to the point where they're saying we don't want to insure homes unless they have their plumbing redone or they install these water leak detection systems.
Oh, I've heard that.
Yep. So it's this fancy device. You can actually track it on your phone, and it tells you if a line bursts in your home, you have a leak, and it shuts off the water supply. Good for somebody that's trying to protect their investment.
Yep.
Bad for somebody that's just happened to be taking an extra long bath that day, and now they have to jump on their phone and turn the water back on. So it could backfire. But these are corrective actions.
Yeah.
Insurance companies want to share the risk with the clients. They want to share a little bit of that risk with the consumer. Right.
They're still trying to make money. At the end of the day, that's what they're in business for. So.
Yeah. And we as people that subscribe to these companies that use these policies should consider allowing them to make a little bit of profit, because at the end of the day, we want them to have the money to pay for us.
Yeah.
If we need to use
I don't
them.
think that's how anybody looks at it.
I know.
Unfortunately, they don't. They're just like, we're getting gouged, in every angle.
Right.
I mean, they're just looking at everyday life, like the prices of homes are up, groceries, gas, and insurance, and
now I got to pay extra money for insurance that I don't ever want to use.
Mm-hmm. Exactly. Yeah.
It hurts. It hurts.
Yeah. So, all right. Well, that's what I got for you, Edgar. Thanks for sharing all that information. And again, for my home buyers and sellers, remember to shop early for home insurance. And Edgar would be happy to help you out. You guys offer what? Auto, homeowners, life,
commercial insurance. We do all of it. We're the people they call when somebody else can't get it done.
There you go. There you go.
Call us if everybody else can get it done too. But we're still a good resource. But
absolutely.
But
yeah. Edgar was like all on it when I said, "Can you join my podcast?" And we haven't known each other that long, but he was all for it. So
heck yeah, I'm happy to help.
Thank you so much, and I'll be happy to send you business.
Sounds good.
Yeah.
Thank you, Marla.
All right. Thanks, Edgar.
You got it.
All right.